Hello traders, good morning. This is Yanis. I'm glad you are able to join us for our outlook for this new upcoming trading week starting March 21st. Without any further delays, let's move to the pairs that we are monitoring week after week. And before getting into the euro-dollar pair, just a quick reminder that as most of you have seen during the past few weeks where we have that ongoing war between Ukraine and Russia, the market is quite volatile and it's very difficult to be able to define a direction because the parameters of that war and of the markets are changing not only on a daily basis but almost on an hourly basis depending on the developments on that conflict. So it's yet another good reason for the traders to turn into the technical analysis when they can't find a way using the fundamentals. And despite the fact that the markets are moved by both technical and fundamentals, since we cannot control the fundamentals, we are trying to find our bearings through the technical analysis. And as with all things, nothing is carved in stone, meaning that we may have a bias, but then real life, big funds, big players in the market may have a different opinion, and the market can change very fast, actually almost in the blink of an eye. So always be cautious, and like I'm always saying, you need to be able to plan your trades, and then all you have to do is to trade your plan. Okay, trading the financial markets is nothing more than trying to establish a roadmap for each and every instrument that we want to trade. And this is why on the charts that I'm using, you see that I'm not using a great number of indicators or a big number of things, because I don't want to clutter the charts too much. But you still need to be able to use at least the 200 moving average. I'm also using the 20 moving average, which is here in blue. The 200 is the thicker one. And then I'm just marking my roadmap on the charts using those areas, which for me allow me to pinpoint the areas, the static areas of support and resistance. Okay. Just as a reminder, the moving averages are dynamic areas of support and resistance, and they are called dynamic because they do move differently according to how price is moving, whereas the static levels of support and resistance are just static, as their name says, because they pinpoint levels that have already been marked on the chart and don't change or don't deviate. So the euro dollar has been in a downtrend for many months now, and right now it's hovering slightly above 110, which is a psychological level, as are all the round numbers. As you can see, 112, 114, 116, all those numbers which I call round numbers are levels where we know that price will stall. Very rarely will you see price going through those levels without taking a breath and without retracing off these levels. So the euro dollar on the weekly time frame seems to have reacted well to that very important low 108, where it fall to the previous lows of 220 and about a year ago actually. And the bulls reacted from that level. Obviously, there were pending orders sitting there, which managed to push the market higher. And right now, on the weekly time frame, we are kind of looking at a morning star pattern without having a great conviction, because I was kind of expecting previous week to end slightly higher than it has on the weekly. However, the bulls managed to push price above that very important key level 110 and closing around 110.45, 110.50. Okay, so the euro may be in a rebounding phase. We need to see if the bulls will have the power to drive the currency to the previous resistance, which now will be 112 on the upside. And to do that, we have obviously the need to get down to the daily time frame and try to figure out how the daily is moving up. So we had Thursday a nice push. Unfortunately, it did react to the 20 moving average on the daily. It was expected. We did have a small retracement down to 110.10 or so. And then price closed slightly higher. However, we are still below the 20 moving average and slightly above that very important key level, which is 110. Hovering at 110.45, 110.50. Okay, so that will depend on how the week will open. What can happen at the open, obviously there are two scenarios. Either that push up will continue, and in that case, obviously the next stop will be around 112. And from there we will have to see, because 112 is a hell of a resistance to the upside. And the euro will need a lot of power to be able to overcome that critical level. The second scenario would be that the reaction to the 20 on the daily will continue to the downside, in which case we will see an immediate retest of 109 and eventually 108. And from there we'll have to wait and see how things will be handled. Dropping down to our trading time frame, and this is what we are looking at. As you can see, the structure on that rebound a couple of weeks ago, this is the beginning of last week, this is the beginning of 2 weeks ago, price managed to push higher, made a higher low compared to the previous one, and then the structure to an uptrend continues so far on the trading time frame. We did had a higher high here compared to the previous one, a clear close above the previous high, and right now we are looking at what could be a higher low as well compared to the previous ones. So if that does materialize, we are expecting an immediate reaction here to that area, the 110.30, which coincides with the 20 moving average on the trading time frame, with that ascending trend line and our ATR resistance, which would be here 109.70. So if the bulls can take control of that uptrend, then this is the trade that we will be looking for, getting in somewhere here at that point. Okay, in which case the stop loss should be here. I would go even lower. Yeah, I would go even lower than this previous low. And then the target, having an entry here, you can aim for the contact on that way up with the 200 and the 112 area. Okay, so that would be the trade should the bulls show that they have the power to push price higher. Now, the second case scenario, if the bulls don't and we see a close below everything here, below the 109.80, then the trade should be different, and then you could consider getting short. And in that case, after having a close below the 109.90, 109.80, then I would go short with an entry here. The stop loss would be a few pips above, and then the target would be that key area around 108. Okay, so these are the two scenarios for the beginning of the week. Personally, I'm looking at the first one, at least for the days starting the week, Monday, Tuesday. I would say that the bulls should be able to push higher towards 112, and from there we will see the reaction. Okay, a key level to watch. Now, getting back to the next pair, and let's move to the bigger picture, the weekly time frame for the pound. The pound dollar has been also having a very clear direction to the downside. As you can see here on the weekly, we have that downtrend structure, lower highs, lower lows each and every time. We did create a lower low last week compared to the previous low, and so far we are having lower highs. So what's to be expected if that downtrend continues, which for me it should be continuing. Let's have a look at the fibs. Where do we stand? So far we are somewhere in between 0.38 and 0.51. So for me, that would be a nice level to rethink things for the pound. And my personal bias in the midterm, at least, will be short for the pound. Unless really I'm seeing something else. But right now we are in a clear downtrend, extremely visible on the weekly. And dropping down to the daily time frame, what do we have? We have okay, so we have that clean structure with the lower highs and the lower lows, and right now we hit another resistance, which was 130.50 ish, as it was marked weeks ago by that purple or pinkish box. And then we had that reaction here. The bulls took a small breathe on Thursday, but nothing really too alarming, and then Friday closed with a bullish candle. However, nothing was able to close actually above those previous highs, and this is a concern definitely for the power of the bulls at that stage. So unless we are able to see immediately a push higher, which will have also to face the 20 moving average on the daily time frame, which is extremely important as well. So there are a lot of bumps to the upside for the pound, and I'm pretty much sure that next week the pound will react, and for me it will react immediately in that proximity of 132, close to the 20 moving average, and obviously on those previous lows here, which now are serving as a resistance. So I don't see the pound being able easily, at least, to break to the upside, and I'm kind of expecting a continuation to the downside. And for me, the next level, the next target will be that descending trend line, and obviously 127, 128, those around levels. So dropping down to the trading time frame to get a cleaner picture of how things are. As you can see, we have that top. We had one attempt last week and yet another one. Not sure at that stage. That last candle is not really telling us anything, okay? And there was two consecutive higher lows here, and the support of the 20 moving average on the trading time frame. So From that point, anything can really happen on the pound, at least from the 4-hour time frame. So you can expect either the pound to be able to push higher on the break here and get to the next level of resistance it will encounter. At that time, the 200 moving average will be here, which is the 133.50, 133. Okay, and obviously if you get in that long trade, then you should have your stops here, if not even lower, somewhere around here. That's scenario number one. Scenario number two, if we do see that this rejection here on that area of 132 continues and we see bearish candles, then at that point you should be considering a short, which for me I would be waiting for a close below the 20 moving average, but that would happen quite fast actually. So I would wait for a close below, and then in that scenario my entry stop would be here. My entry short, sorry, would be here. The stops would be slightly above, and then in that case my target personally would be in the 129 area for the week. Okay, so that's how we are intending to look at the British pound. Getting back now again on the weekly time frame so that we can move on the next pair, the dollar Swiss. The dollar Swiss was in a range. It was confined for, it is confined still now in a range for the past months, and that makes that pair extremely difficult to trade actually. So what do we see and what can we gain from the technical analysis standpoint? We can see a few attempts from the bulls to try and break that high here, which is extremely significant, the 0.94 mark. Okay, we had one push, we had a second push, and then from that point, from September 21, nothing could really happen. The bears couldn't push lower than 0.91, and the bulls couldn't push actually higher or maintain higher than 0.93. So we are kind of confined within 200 pips, and that's the scenario since basically almost September 2021. Okay, so what do we see? We saw 2 weeks ago a huge push to the upside, which took out all those candles, those weekly candles, an extremely important push. However, it seems that last week the bulls tried to keep price extremely higher, but they pushed till that previous high, the one that was extremely important, and then the week closed out very, very badly for them, and it looks like the bears are now in control despite that push. Okay, so that's the bigger picture on the dollar Swiss on the weekly. Doesn't tell us much, so I'm guessing that dropping down to the daily will help having a better and cleaner overview, which is not really visible. However, we have that those last days for the previous week on the daily closing very in a very bearish mood, went up through that resistance around 0.94, hit the wall of the previous, like we saw, the previous high, the previous extremely important level, and then price crashed. So I'm kind of expecting price to continue to the downside, at least till it meets the 20 moving average on the daily, and that can happen at 0.93, that can happen at 0.9250. It's not very clear and it's not very easy to define, because like I said, right now we are back into that range, okay, and nothing is really very clear. So personally I will stay definitely out of the dollar Swiss. For me it doesn't look anything appealing. and it's too complicated to try and find out a direction when the pair doesn't really has one. Okay, so even dropping to the 4-hour time frame, what do we see? Obviously, we had that reaction. The 4-hour might be easier actually to trade, because here you see we are clearly in a downtrend on the 4-hour. That isn't true, however, on the weekly, and it's not really true either on the daily, because the daily is sideways. It's not in a downtrend either. So if I had to pick up a direction, I would choose short, because of the fact that on my trading time frame, the 4-hour, the pair managed to close below it, kind of retested it here, and then closed below the 09350 level, which is important. So if I had to pick a trade, that would be the trade for upcoming week. I would have an entry here, although a lot of things may and can happen at 093. And we are very close to that. But then if you wait to go further down, you see, because the pair is in a range, the static support and resistance level are quite close actually one from another. And maybe to trade that pair in a better way, you should be able to drop to the 1-hour time frame instead of the 4 hours that I am using and we are using, to have a clearer picture of how the price is behaving and what the pair is trying to tell us. However, again, that would be my trade. I would be short here. My stop would be somewhere above the 20 moving average on the way down. And in that case, I would be waiting for a reaction on the 0.9250, close to the 200 moving average on the trading time frame. Let's see if dropping down to the hourly helps at all. Yeah, we may have that reaction that I told you here on the hourly. You see that the 200 has a good slope to the upside, obviously, because it has gained from all that uptrend here. We are respecting the 20 moving average on the way down. On the hourly, we had a touch here. We had second one, then went through the levels, then went through that descending trend line. So it's very confined, and for me it's not quite clear actually, and this is why I prefer staying out of that pair. There are too many unknowns and too many reaction areas that can happen, and I'm not very comfortable picking up a direction for that pair. Besides, we do have a lot of other instruments to trade, and not necessarily we don't want and we don't need to push ourselves to find trades if they are not obvious and if they are not pointing out by themselves. Okay, so for me it's a no for the dollar Swiss, and I will be in the sidelines. However, immediately because of the close, the mood is obviously to the downside. Moving further up to the dollar yen, on the weekly time frame, we saw that the yen is losing steam for weeks now, and especially the dollar against the yen has appreciated a lot. Obviously, the last year and a half almost, since January 2021, and the pair is in a very nice uptrend, breaking up resistances after resistances, which is excellent. Okay, so the overall mood for the dollar yen obviously remains very bullish. However, there hasn't been any significant retracement so far. So even if mid and longer term the pair remains bullish, I'm kind of expecting some kind of reaction. So dropping down to the daily time frame, what do we see? Sorry. We have that range, which was an accumulation phase, okay, and that descending trend line was quite helpful here on the daily. We saw that we bounced back from the static resistance around 113.80 up to that descending trend line, actually going back and forth on the 20 moving average on the daily, which is a clear sign of sideways, and then the bulls managed to break above that descending trend line and pierce above the 116.50 resistance, and from there the pair has set its course to the upside. Okay, so we are still remaining in a very bullish uptrend for the dollar yen. However, I'm kind of expecting a reaction. I would like to see a retracement, and then, you know, waiting for the pair to gather further strain before moving eventually higher. And dropping down to our trading time frame, what do we have? We have that very nice break of the descending trend line, and then the piercing of the static resistance, and then price went straight up to the next resistance level. You know that we have those plotted now for weeks, if not months, and we are using them. And as you can see, this is the roadmap that I was telling you at the beginning of that presentation today, which is absolutely necessary for you guys to be able to use it, because it makes things easier. While the direction that we have to pick is not easy, but once the pair has shown us what it intends to do, any pair actually, okay, then it will follow the roadmap that we have set, and that's the plan, and this is why we need to trade our plans. Okay, so as you can see, after the breach of that level, then the next stop was 118. Okay, it reacted a bit here, dropped down to 117.80, and then pushed further up once it broke the previous highs, came back down, found support on the 20 moving average. So now here's the point, here's the problem. The 4-hour seems to be closing with an evening star, okay, which is the last bullish push to the upside. Then we have a pin bar, to the downside, okay, a topping tail to the downside, very bearish. And now it seems like the red bars will continue at least till the 20 or till the 118, the 118 level. And we'll see from there. So I'm kind of expecting an immediate reaction to the downside for the dollar yen. I don't know if it will have enough power or if it will stagnate here, if the bulls will gather forces here, or if the bears will be able to push it eventually further down around the 117, 116.50 area, where this is where I would like to buy that pair in its way up. So for me, an immediate trade, and again I'm telling that as an immediate trade, which has a very high risk, but it can also have a very high reward, would be that play. Okay, immediately at the opening of the market, go short, and then wait to see if you gather if the direction is correct, and if it's a winning trade, at least at the beginning, then you'll have plenty of time to wait and evaluate whether price will react to the 20 or the 118 level. Okay, and you can cover your position, you can secure it and wait and see how things will move. That will be one approach. The other approach, obviously, for me would be to try and wait for the retracement. Now it can happen here, it can happen here somewhere, in which case the stop loss will be below that previous low here, and the target obviously in that case will be the 120 area. Okay, that can be one. And then eventually, if the bears manage to get themselves a nice treat down to the 117 area, then my entry long would be to be able to shop somewhere here. I would have my stop below the 200 moving average, which would by that time be somewhere here. And then my target, obviously, in that case would be the previous highs. Okay, so that would be somewhere here, giving me an excellent risk to reward ratio actually, before waiting to see if price can move even higher. So these are the possible plays for upcoming week. I'm kind of expecting a reaction to the downside, not sure how deep or how important that reaction will be from the bears. And then I would like to see a bullish pattern, which would confirm to me that the bulls are now again in control and will try to push price to the next level, which is 120. Okay, or if the scenario of the bears taking control and manage to drop down to 117 area, then I would like to shop for a long somewhere around that price tag. So moving forward to the Aussie dollar, let's have a look at the weekly time frame. Okay, what do we see? We see that the Aussie dollar is in an uptrend for quite some time. So it's kind of natural, especially on those very high time frames, to experience a more deeper retracement. As you can see, the pair managed to retrace to those previous lows, which is extremely important support. And if that one breaks, then that will open the gates to much lower price tags. Okay, but you saw that price reacted once, price reacted a second time, and now the bulls managed to close above the previous highs. We did have a very healthy retracement to that previous base of support that was created here on that green area. And then last week again closed with a very bullish candle, hitting up somehow that resistance that we will see is very clear on the lower time frames. So technically the pair still remains in a very big uptrend, but now we will need to see the small variations on the smaller time frames to decide week after week what are we going to do. Okay, so this is the picture of the previous weeks. We had that second retest, and then as you can see, the roadmaps are respected in fantastic way. Any level that is tested and retested is precisely the previous areas of support and resistance, and this is why I'm always saying that the roadmap is very important for you to be able to trade. You need to do your homework during the weekend. It doesn't take much for the pairs that you're trading. Just drop down to the weekly like I'm doing. Draw what's evident in your eyes. Draw what pops up, okay? Just take a rectangle. And as you can see, okay, so here we do have price rejection 1, 2, 3. I mean the candles are countless. Okay, so they pop up, they pop out, and especially in the higher time frames. If you go, for example, to the monthly, okay, you don't have to be exact. You don't have to. Okay, so obviously on the monthly, this is a huge level to watch. Okay, and by doing that, you're just drawing your roadmap. Okay, this is a huge level to watch, and so on. So obviously, you're not you do not need to do that on the monthly. The monthly is a very difficult yet very important time frame, but obviously that can be done in the exact same way on all the time frames. Okay, so this is pretty much what I'm doing. I'm trying to have a look where is price stalling, where is price reacting, and as you can see, that line here, that brownish line, has been drawn because it obviously pops up. Okay, we had a reaction here, again and again and again and again and again and again. Okay, so that doesn't stop. So unless price moves to higher, between higher or between lower levels of support and resistance, these supports and resistance levels still remain in play for as long as they are valid. Okay, so this is how you should plan your trades, and this is what I'm doing, and this is what all the traders are doing. So dropping down, getting to the daily, okay, we had a nice push above the 0.7350 area and the close of the market, which is now dead on the descending trend line, and also at the 0.74 something, let's say 20 level, which is also that important resistance. So now the Aussie dollar on its way up has a major resistance to fight. Okay, it should be able to break it and move higher. However, here on the daily, we don't have a clean direction, and the reason is because we did manage to make a higher high compared to the previous one. Okay, but we are not still making higher lows. So we did have that push, we did have that low. Okay, so that's one higher high, one higher low. If that continues, I'm kind of expecting the price to hit 0.7550 before getting back down and use that 0.74 as a support, and then eventually break higher the 0.7550, which is a huge resistance to break. And for me, it will take some work to do that. So that won't happen overnight. So the Aussie dollar on the daily time frame is not quite it's bullish. Obviously the pair is bullish, okay, but I'm not really keen into entering right now. Either I will be waiting for price, if it flies immediately above towards the 0.75 mark, then I will be looking for a reaction, maybe a quick scalp to the downside before hitting the support I'm kind of expecting. Now, if it does react here, then we will have a drop, probably either a sideways market above or at 0.7350 area, or even slightly lower 0.7250 area. Okay, there's no talks or no discussion about getting short for that pair. Nothing below, as long as it trades above 0.70, there's no short scenario whatsoever. Okay, so dropping down to the trading time frame, the 4-hour time frame, we saw that price took a breath here, tried to push higher, did close higher actually than the previous. However, like I said, it does have that very important level to break. Can it break it? Yes, of course it can, and then immediately aim for 0.75, 0.7550, or break a bit and then get back down to the 0.7350 to get some strength before hitting 0.7550. So if I had to trade the pair, I would go long. Obviously, there, like I said, there's no short scenario. It can go long immediately on the opening of the market. The bulls can break above that, in which case your trade can be as so. Second case scenario, it can break slightly, push back down to retrace, and then in that case I would look to buy at a lower price somewhere here eventually, and in that case my target would be again the previous highs, at least the initial target. Okay, and from there we'll see how things can or will move. But again, for the Aussie dollar, there's no short scenario. Even if the pair drops back down to 0.71, that can be played through some scalping trades, but the direction remains long as the pairs maintains 0.7150 to start with. Okay, so you can drop obviously to lower time frames like the hourly time frame or the 2 hours to get a clearer bearing of the moving averages, of the support and resistance levels, and you can fine-tune your trade according to those entries. Obviously, the lower time frame you're dropping down to, the more noise you will also experience at the same time. Okay, so you need to be cautious. Moving up to the dollar CAD on the weekly, the dollar CAD has closed the week in an extremely bearish way. And it's not only the bearish way that was important to notice, it was mostly the breach of that level that I had outlined with line and a box and a color, which was 126.40, and I've mentioned in all the last week's presentations and outlooks that was a super duper key level that we had to watch. And again, there was that resistance here which I drew from here, but it was because, you know, as you can see, these are the points that I was telling you when you try to draw your support and resistance level. I mean, they do stand out, right? I mean, there's nothing difficult to that. You look at your chart, what do you see? You see that at that level, price has rejected everything. Okay, so it's simple for you. Draw, get to the weekly time frame. You cannot go higher than that, and you cannot go, I mean, you can go higher, but it's not worth going on the, but you can do it on the daily, you can do it on the 4 hour as well if you're trading on the 15 minutes, but you need to do that on a high time frame. Okay, so go drop to a high time frame, draw what makes sense, what you don't need to draw too many things. Okay, draw just what makes sense, what stands out, and from there you immediately you'll have your targets, you'll have your stops, you'll have everything. You cannot trade without all this. Okay, so price reacted here, reacted once, reacted twice, reacted 3 times in the past 4 weeks, in the past month, and then that reaction was violent because not only did it engulf the previous week, it broke through the 20 moving average on the weekly, and it closed below that extremely important level on the weekly as well. So that's a point of concern, and basically a point telling us that the bears are in complete control of everything. Now, here on the daily, what do we have? We don't have anything clean. Price here couldn't break above and close above, otherwise it would have pushed. Again, we are having a rejection, so we are here making lower lows, but we are making slightly higher highs and then a higher low, but then a lower high compared to this one. So right now the daily is not going anywhere. It's in a sideways market from 128.50 down to 125. That's a big range, I get it. Okay, but you can see here on the daily, and this is what puzzled me on the way down, it's that the 200, seems to be providing some interesting support. So despite the fact that we managed to have very bearish week on the weekly, as you can see on the daily, what do we have? We couldn't have a close below the previous low. We couldn't have a clean close below the 200. And we do have that support of that ascending trend line that's in place. So basically, in that area, anything and nothing can happen, at least from the daily standpoint. Okay, so as you can see, the technical here, the use of the 200, the use of that ascending trend line, which comes way back from the weekly time frame, you cannot trade without all this. Okay, and unfortunately they are working, and Now if we drop down to the 4-hour time frame, what do we have? Haha, now the picture is a bit cleaner. Okay, so we had all that move on the way down. We have that close below the very important 126.40 and that yellow area, which now serves as a resistance. We have that ascending trend line, but given the fact that on the trading time frame we are looking at lower highs and lower lows at the same time, I'm kind of expecting that now the bears will have the power to break and close below, and obviously they will go through that ascending trend line like butter. So for me, I will be looking for a short trade, probably with an immediate entry, and trying to keep my stop as close as possible. That would be where I will use it. And then in that case, my target would be the 125 area. Okay, that gives me a 1.5 risk to reward ratio. It's not bad. It's not bad at all. And I'm still trading in the direction of the major trend, which might be relatively safe. However, there's that point that I pointed out. We are creating a double bottom here. We may have a rejection or a reaction at that ascending trend line, but also at the 126 level, which is here. So we need to be careful a bit here. Okay, we can try to get into that position to try and get some steam. If price goes further below, we will be in a small profit, and try to see if that can be a break-even trade eventually if there's a reaction. And that's the reason why I would prefer getting in early on that one, even if it's quite risky. You know that I generally do not enter trades in this way, but I'm doing that sometimes if I want to be in the driver's seat and gain some kind of advantage of time, because I know where things will react. Okay, so that's my bias for the dollar CAD. I do keep in mind that the dollar seems to be strengthening all over the board. The dollar index has managed to keep some quite important levels as well. That can say for upcoming trading week that the dollar can appreciate. So be aware of the dollar pairs of the majors. You may have some reactions in favor of the dollar, which can go against the plans or the trades that we have in our minds. So you need to be aware of that as well when you trade. Last and obviously not least, gold. Starting again from the weekly standpoint, we do have an evening star. I told you last week already that the close with that pin bar, that topping tail, was a clean and very clear direction to the south for the next week, which was last week. Okay, we identified that double top, we identified that area of resistance, and we identified that huge candlestick pattern on the weekly, which was a huge statement from the bears. And there was no doubt whatsoever of the direction of gold for last week. And as you can see on the daily, once we had that push and that close below the 2020 mark, the 2020 mark, everything took its predefined course. We had the break of the previous highs. We had the resistance and the break momentarily of those previous highs. This was the areas within those two brown lines which we had identified for quite some time now as two levels, one to the upside and one to the downside. So right now the downside was tested once. It did rebound precisely up to the that resistance, and then the bears managed to push and close below Thursday, on Friday, Okay, and to me now we can have two scenarios. Obviously, the momentum for gold is bullish. We also had identified that weeks ago, okay? But we do see a reaction right now. So that reaction can be probably a reaction, a healthy retracement, like I'm calling them. And usually the deeper they are, the better for us. So right now we do have a reaction around the 0.5, the 50% Fibo level from that move to the upside, okay? So from here, two things can happen. Either price will rebound immediately from here and they will push higher than 1960, 1965, and for me in that case, the next target will be the 1980 and 1990 mark. That's scenario number one. Scenario number two is the bears will be able to push further to the downside, in which case that will make things very interesting, because the next stop would be around 1890, and for me it will even go further down to 1875, where we will have those highs, and those highs here creating a major resistance to the downside, and at the same time a point where the bulls can again regroup their forces and try to push price higher. However, again, gold is very tightly is very closely tied to what's happening on the fundamentals, on the risk assessments, on war, and a lot of things. So right now it seems that gold is losing steam, and for me, out of the two scenarios that we described, I would be more looking to sell gold still at that point rather to buy gold. So dropping down to the 4-hour time frame, what do we see? We had that reaction here, spot on the 200 moving average, the 1900 level of gold, again a round number, and then we had that block, that super block, that resistance at 1950, which coincides with the previous highs and previous resistance. So the outlook for on the 4-hour is clearly bearish. We have our dynamic level here around the 1960. We do trade right now below the 20 moving average. However, we still are above the 200, and this is why here it's a fuzzy and very dark point where we cannot make any kind of decision. However, like I said, I'm more inclined to a bearish trade, but I will play it like that. I will wait for gold to drop and close below the 200. Then obviously it will react, either closing below or hitting the 200. Price will react. If it still maintains a level below the 20 moving average, then I will short it at that point. So I would go short on a retest, on a reaction of the 200 and a retest of the 20, and then a super bearish engulfing candle that will confirm the short trade that I'm looking at. In that case, that would be the trade. My stop would be above the previous highs, and the target will be here. But again, okay, it's not an immediate entry here. I will wait to see how things materialize and wait for a rebound here and a rebound on the 20, then a bearish engulfing candle before committing to that short. That's scenario number one. I'm preferring that one, let's say, but I will also have my eyes on the reaction here on the 200, and eventually then a very important engulfing bullish candle, which in that case will probably make me take that long. If that happens in this way, then I would be long somewhere here. Stop loss would be there, and that would be a very interesting trade because that would be my target. So for the long scenario or for the short scenario, this is what I'm looking for. Okay, I'm looking for a retest here, a retest of the 20, and then a crash down, but only after having seen a bearish engulfing candle taking out those one or more of those bullish candles here on that way up. Okay, that's scenario number one for the short. For my long, I would be willing to wait, not much, to wait for a retest of the 200, which will happen somewhere here, and then a bullish, engulfing pattern that will take out everything, and in that case, that would be how I will commit my long trade. Okay, so that's the way I'm looking at gold for upcoming trading week. So this presentation and this outlook for the new week has taken a bit longer than I expected. I'm sorry for that, but I hope that it has been longer because I was trying to explain you some things, and I hope that those things were clearly explained and they will help you towards having better trades for next week. Having that said, thank you very much for being with me. Hoping to see you all next week. Enjoy your weekend and take care.